What is going on, guys? Welcome to our Finance Tuesdays. I hope you're having a good week so far. And we're going to be talking about the purpose of whole life insurance and why you might want to consider using one. Now, a little bit of background about me. I've been using whole life insurance for the past 4 years. I've paid off my car, paid off all the credit card debt, getting ready to pay off my wife's car by next year, and hopefully Sally Mae as well. That's the plan going into 2025. With that being said, what is its purpose? Why should you even consider putting your money in a life insurance policy? Well, first off, it's going to grow tax free. You're not going to be taxed. You also can use it however you want. You can borrow the money. And I know you're like, well, I still got to pay it back. You do. But here's the difference between using the bank and a life insurance policy. When you borrow from the bank, you won't see that capital again. You see, even if you put $1 in the life insurance policy and you borrow that dollar out, that dollar is still there. And that's the biggest difference is your money is still going to grow even if you use it in another place. That's what I love about a whole life insurance policy is that you're going to get 3 to 5%. I know it's not a lot, but it's still going to grow year by year. And if you use your money to go out and invest, or in this case, what I'm doing is paying off my debt, all I do is I take my old payment that I was making, the minimum payment, whether it's a credit card payment, a car payment, I pay it off, and then I take that old payment and pay myself back into the life insurance policy. That's what the purpose of life insurance is. You're supposed to use it as a tool. It's not an investment. It's a store of value. You want to use it correctly. So one of the things that it does well for you is that it helps with building capital. You see, when you have a forced savings plan with this, you're going to build a lot of savings. And what you're going to notice right away is you're going to feel solvent because you're going to have a separate emergency fund where if you have a loss of a job, you have a rough health year, you've got money set aside where if you need it for those purposes, then you use it. Obviously, the main things you want to use it for is just education. You want to use it for investing, and you want to use it for paying off debt. If you use it for any other purpose, make sure it's being responsible, right? I wouldn't suggest using it for vacations, buying nice things. I think that's a bad idea. Again, the purpose of life insurance is just to protect your capital. That's the big thing. If you have it in the bank, you really expose your money because the bank is using your money all the time. Every time you make a deposit, they go out and reinvest that money and put your money at risk. They really do. They reinvest it. They don't tell you what they're doing with it, but they're using it, right? So why not become your own bank? Why not take more control over your capital? You see, when you put it in a life insurance policy, it's going to grow and then you're going to be storing money. And when you're ready to borrow, you borrow the capital, right, for either education to get better as a person, investing, or paying off debt. And you're like, well, I still got to pay that interest. You do, but if you pay yourself back at a reasonable time, well, two things could happen. If you pay yourself back completely, you have the capital to use again for something else, right? Or the second thing is the interest rate. So the interest really just varies. So you could end up paying like 1 to 3% at the end of the year if you're doing your due diligence and paying yourself back on a month-to-month basis. That's what I've been doing. And what you'll find out very quickly is that it's cheaper than using other sources of getting out of debt. So for example, if you're making higher payments, you're paying more interest because you're paying the principal and the interest on that. And at the end of the day, you're going to end up spending more on interest, right? Why not put that money in a life insurance policy, and then once you're in position to pay off your debt, you just borrow, pay it off, and then you just restore your capital. Whereas if you pay off your credit card debt in the bank, let's say you have $3,000, I have 3,000 in my life insurance policy, I have 3,000 in the bank. I take the money from the bank, I pour it into the credit card debt. Now it's gone, right? Here's the problem. If I do the same thing with the life insurance policy, that $3,000 is still there. The bank, no longer there. That money's gone forever. So I don't get an opportunity to use that capital ever again. Whereas if I pay myself back in the life insurance policy, one, I'm still saving on a month-to-month basis, so I'm still growing my capital. And then when I paid myself back, well, I now have $7,000, $8,000 because I've been saving. And let's say like I put like let's say I put $4,000. Now I have 7,000. And if I do the same thing in the bank where I'm just saving, where I only have $4,000, right? You see the difference there? That's why I like life insurance more because I get control here. I can put my capital here. Now, I'm not saying not to have an emergency savings in your bank. I think you still should have one, but to have money put to the side where I don't see it, I don't touch it, I only use it for specific purposes, really helps me out because when I'm paying off all this debt, and I'm paying myself back, I don't feel like my all this effort is being wasted. And at the end of the day, it's I'm protected. Another thing is you have a death benefit. So let's just say you can't finish paying off your debt because you die, God forbid. Something happens and now your wife has to take care of things. Well, she's gonna have a large enough death benefit to take care of things when you're gone. You don't have to worry about that being on your shoulders. You've taken care of that situation. She can handle the costs of the rest of the debt. She can handle, going out and investing or handling the funeral expenses and all that jazz, right? So you just want to think about that. Protect yourself now. That's why it serves a great purpose to have that life insurance, because you have a large enough death benefit, like 400, 500,000, or even more, or your spouse is taking care of the rest of your life, and you don't have to worry about that. And you can just focus on getting better with your personal development, working on your income, growing your capital, and keeping it safe. And if you aren't debt free, well, you can work on getting out of debt and still saving at the same time. And then when you're done everything, you've got all this capital available to go out and start investing. That's why I love it so much, because if I'm using the bank to pay off debt, yeah, I'm debt free, but now I got to start saving because emergencies are inevitable. Something could happen to our health, our car will break down, housing expenses, kids, do some crazy stuff where they have health issues going on or whatever. There's always emergencies that happen unexpected, right? So that's why you want to have a large enough, savings. So if you lose your job, you've got 6 to 12 months of expenses covered. You're prepared for any unknown health situations. That's why you want to have a full savings plan. That's what makes this design so great. So hope you guys enjoy this video today. Love to hear your thoughts on what you think about life insurance. Do you think it's helpful? And do you think it could really benefit you guys? Also, make sure you also subscribe and like the video, and I'll see you in the next one.